The Peter Schiff Show.
Today's podcast is sponsored by NetSuite, the easy-to-use cloud-based business management software for every aspect of your business. By popular demand, NetSuite has extended its one-of-a-kind flexible finance program for a few more weeks. Head to netsuite.com/gold. Today's podcast is also sponsored by Masterclass. Learn from the best to become your best with Masterclass. And right now, our listeners will get an additional 15% off an annual membership at masterclass.com/gold. I didn't think I was going to do a podcast today. I'm on vacation here in the Bahamas. I'm at the Atlantis Resort with my family. I came here I stopped here going from Puerto Rico back up to Connecticut. And I did my final podcast on Thursday. And the day after that podcast, silver and gold had a big move up, particularly silver. Silver really broke out. It was up almost $2, I think, on the day. And it didn't just close above 30, which was a level that silver had not traded above since 2013. But we closed above 31 on that day. And in fact, on Sunday night, we spiked again. And we got as high as $32.50 in the price of silver. Gold, which did not set a record high on that Friday, set a new record high on Sunday night, and then another new record high on Monday. We got above 2,454 for the price of gold. Now, when I saw that breakout on Friday, I did a special video for Schiff Gold. Some of you may have seen that. It actually did get quite a few views. It wasn't a normal podcast, but I wanted to alert people to this silver breakout because I've been talking on my podcast about how good silver looked. I've been telling people that they should buy more silver than gold because gold kept going up and silver wasn't. And I guess that the reason for that was that central banks were the primary buyers of gold and that they weren't buying silver. And since the general public has been selling, in fact, we've had 11 consecutive monthly outflows out of gold ETFs, indicating that investors in the US, also in Europe, have been selling, even though the price has been rising. So somebody must be buying enough gold to offset all this retail investor selling. And a lot of that is central banks. And they don't buy silver. They don't have room for silver. They're buying gold. And so I thought that silver was kind of getting left out, but that eventually, like a coiled spring, it would explode. And I kept saying, buy silver, buy silver. It's got to go up. There's no way gold's going to keep rising and it's going to leave silver behind. In fact, I know that in a real bull market, which I believe we're in, silver could lead gold. And so it's been lagging. And so I wanted my audience to buy it before it jumped ahead. Well, now it had that breakout. And so I did that special video on Thursday to alert people to this breakout, to get them to go and buy some silver on that breakout. Well, the reason I'm doing this video today is we've had a nice 2-day correction in price following that breakout and move to new highs. Most of the decline was today, although we had some of the decline yesterday. So I mentioned that silver got all the way up to $32.50, which is still low. It's not like that's a high price. It's just the highest it's been since 2013. But as I'm recording this podcast on Wednesday night, silver is back down at $30.73. So that's a pretty substantial pullback, about $1.80 or so from the $32.50 that it traded on Monday. And if 30 is now the support, which I think it is. Now that doesn't mean silver can't go below 30. But I think 30 is to silver what 2000 was to gold. Once we broke above 2000, 2000 became support. And yes, every once in a while we dip below 2,000, but we never stayed below it for long, and it quickly came back. So I don't know if silver is going to go back below 30,000. I mean, 30. It might go below 30, but I don't think it'll stay below 30 for very long. And at $30.67, that's close enough to 30 not to worry about it. I would buy it. On gold, gold is now about $70 off the high of 24.50. It's at 23.77. I think the support in gold is moving higher. So it was 2,200. Now it's probably 2,300, maybe even a little better. So I don't think you're going to get much bigger pullbacks than what we've just seen in the last couple of days. But I wanted to reiterate that this is an opportunity to buy both metals, but in particular silver. And the catalyst for the sell-off today was the Fed. And you had kind of like a 1-2 punch to the gold and silver market from the Fed, because first you got some statements that were made by a Fed official, and I forget who it was. I mean, I guess it's immaterial, because you could just switch them around because they don't really say anything any different. But one of them was on CNBC, and he had an interview. And then later on in the day, we got the minutes, the FOMC minutes that were released. So that was the second punch. The first one was the interview. And during this interview, the guy said that the rate cuts that are coming, right? The Fed is still talking about how these rate cuts are coming. But he mentioned that they're probably not going to start until later in the year. And that if they start later in the year, there may only be one, right? Because they may start the rate cuts so late that only one of them happens in 2024. And so we get the other rate cuts in 2025. So as soon as those words came out of this guy's mouth, gold and silver immediately sold off. Again, the traders who are selling gold and silver still don't understand why the prices are rising in the first place. It doesn't matter when the Fed cuts rates. It doesn't even matter if they do cut rates. They never have to cut rates. The Fed can relieve rates right where they are, and gold and silver prices should skyrocket. Why is that? Because they're too low. The Fed aborted the hiking campaign too soon. And so it doesn't matter if they cut rates. Sure, if they cut rates, maybe gold and silver will go up a little quicker, but they're going to go up no matter what. Because the one thing we know is that the Fed is not going to raise rates. And one of the ways we know that is from the FOMC minutes that came out today. Because when those minutes came out, once again, they were interpreted as being hawkish, because Fed governors in those minutes indicated that there was some concern about inflation being higher than they thought. Well, I mean, duh. I mean, of course they have to acknowledge that, but there was nothing new in these minutes. There was nothing hawkish in these minutes, but gold and silver were already pulling back from the highs. And when this came out, the spin was, oh, look, they're worried about inflation, and so they're not going to cut rates as soon as we thought. Well, if they were really worried about inflation, they wouldn't even be talking about cutting rates. That would be the last thing on their mind. The fact that they're still talking about cutting rates, and they're just kind of arguing about the timing of when they're going to start, that right there proves that they don't care about inflation. They're not fighting inflation. Anyway, I got a quick commercial, so we're going to play that. I'll be right back, and I'm going to continue talking about the Fed minutes. Here's some quick math. The less your business spends on operations, on multiple systems, on delivering your products or services, the more margin you have and the more money you keep. But with higher expenses on materials, employees, distribution, and borrowing, everything costs more. So to reduce costs and headaches, smart businesses are graduating to NetSuite by Oracle. NetSuite is the #1 cloud financial system, bringing accounting, financial management, inventory, HR into one platform and one
source of truth. With NetSuite, you'll reduce IT costs because NetSuite lives in the cloud with no hardware requirement, access from anywhere. You cut the costs of maintaining multiple systems because you've got one unified business management suite. You improve efficiency by bringing all major business processes into one platform, slashing manual tasks and errors. Over 37,000 companies have already made the move. So do the math. See how you'll profit with NetSuite. By popular demand, NetSuite has extended its one-of-a-kind flexible finance program for a few more weeks. Head to netsuite.com/gold.
All right, so I'm talking about the FOMC minutes that came out and the spin on Wall Street that these minutes were hawkish because the Fed is acknowledging that inflation is higher than they thought it was going to be. Well, they have to say that. They can't ignore that inflation is higher than they thought it was going to be because they would look ridiculous not to acknowledge the obvious. But if you actually read what is in those minutes, this doesn't matter because the Fed is still convinced that rates are sufficiently high to reduce inflation back down to 2%. And so the fact that inflation is taking longer to get to 2%, that hasn't changed their belief that it's going to get there eventually. So they're undeterred by what they've seen. Doesn't matter that it's going to take a little longer, it's still going to work. They haven't even questioned or brought up the possibility that rates are too low, that just maybe they're not restrictive enough, or they're not even restrictive at all, which is more likely. Now, one of the things that they did say or was revealed by these minutes is they said that they were prepared to raise rates if the economic data supported that. But that's not true either, because the economic data already supports that. You see, they're saying if the data changes, if something happens and we get new data that shows that higher rates would be appropriate, well, then we'll raise rates. But only if we get future data that reveals that higher rates are appropriate. Well, that's BS because the data that we've got right now, they don't need any data in the future. The data that they're looking at right now shows that interest rates need to go up. The fact that they're ignoring that data and they're not only not hiking rates, but they're still talking about when they're going to cut rates, that proves that they're never going to hike rates. Because if they were going to hike rates, they would be hiking it right now. Why are they not hiking rates right now? Well, because they're afraid. They don't want to. They don't want to do it politically. They'll sink Biden's chances, which are already slipping away from being reelected. He's already, the most unpopular president up for reelection. Rate hikes would make him even less popular or more unpopular. And it's not just politics. It's what would happen to the financial system. What would happen to the banks? I mean, we already know what happened to some banks. They started to fail. That's why the Fed stopped hiking. It wasn't because inflation was coming down. It's because the banks were coming down. So they had to stop the bleeding. So they stopped the rate hikes. And they started dangling the carrots of rate cuts out there to try to prop up the markets. Stock market made new highs. In fact, the Nasdaq set new highs, and it's going to jump again tomorrow. Nvidia came out, with better than expected earnings, which happens every time they report. The stock is now over $1,000 a share. It's up about 5%. And they announced a 10-for-1 split, which, of course, is insignificant in reality. But in a bubble, right, that's good news because now it's not $1,000 a share. It's $100 a share. So let's buy it because, it's cheap. When it's not cheap, there's just more shares outstanding. You've just taken the same pie and you've cut it into smaller slices. But somehow that works. That generates even more demand. So we've got record highs in the Nasdaq. The Dow has flirted with 40,000. It's gotten above it a couple times. It hasn't closed there. But the main reason that we're talking about record highs in the Dow or made record highs in the Nasdaq, was because the Fed stopped hiking rates, but not just because it stopped hiking, but because it promised to start cutting. And so as far as the market is concerned, it's not a question of if the Fed will cut. It's a question of how soon are they going to cut. Now, the gold traders, the minute they sense that the how soon is going to be later, well, they're trained to sell gold and sell silver. And that's what they did today based on these minutes. But the people who are doing the selling don't even understand why the people who are doing the buying are buying. And the fact that gold is going up. It's not going to stop. Look at other commodities. Look at coffee. Look at cocoa. Look at sugar. Look at orange juice. I mean, everything is going up, right? Copper hit a new all-time high. Copper has pulled back a bit. But all these prices are going up, and they're going to keep going up. Oil has taken a breather, probably because of whatever we're selling out of the Strategic Petroleum Reserve. But that's not going to last. We're going to see surging commodity prices. This is obviously an indication of inflation. It's not that these soaring commodity prices are going to cause inflation. It's their rise is being caused by inflation. They're going up because of inflation. And if inflation was really coming back down to 2%, prices would not be going up. In fact, one of the things that was written in the FOMC minutes about inflation, which again proves that the Fed doesn't understand inflation or they're lying. They mentioned that maybe, just maybe, if we had enough new productivity, that the economy could grow faster without causing inflation, which is a ridiculous statement to make because the statement assumes that economic growth causes inflation. That if the economy just grows too fast, well, we end up with inflation. But maybe if we have some extra productivity, we can grow faster without causing inflation. Well, no matter how fast an economy grows, it will never cause inflation. If it's legitimate economic growth, in fact, the faster an economy grows, the more prices go down. That's what economic growth does. That's why it's a good thing. It lowers prices. Real economic growth means the economy is producing more stuff, right? That's the economic growth. We get more goods and more services out of the economy, right? Because that's what a growing economy is supposed to deliver, a higher standard of living. What determines our standard of living? It's the stuff that we can buy, the stuff that we can afford. But first, it has to be produced. So the more goods and services an economy can generate, the higher our collective standard of living. So that's how an economy grows. It produces more stuff, goods and services to the people who are living in that economy. So how can economic growth make prices go up? How can a big increase in the supply of goods and services make those goods and services more expensive? It's not. It's going to make them less expensive. It's going to make them cheaper. The more the economy grows, the lower prices are. That's what happened in the 19th century. I've mentioned it on the podcast many times, but it's worth repeating. Look at the consumer price index in 1900. It's half of what it was in 1800. 100 years of falling prices. In fact, if you want to know the most productive time period in U.S. history where we had the most economic growth, it was the Industrial Revolution. It was after the Civil War was over and before the First World War started. During that time period, that's when America had the fastest growing economy in its history. And not only did we have the fastest economic growth, we absorbed millions and millions of immigrants, including all four of my grandparents came during the latter part of that time period. And prices fell the whole time. So we had the most economic growth ever, and prices fell. And so if all the economic growth back then didn't cause inflation, why would growth, a fraction of that, cause it now? It won't, and it doesn't. It's a lie. But again, it's part of the government's propaganda attempt to blame inflation on the private sector, to shift the blame away from itself and say, hey, the reason we have inflation is because the economy is so strong. You see, we have this booming economy and well, now we have inflation. And so it's a good thing that we have inflation because we have a strong economy and it's just an unfortunate trade-off. You know, we have a strong economy and so we got to put up with this inflation. Anyway, I got one more break, so stick around. We got a lot more to talk about on this podcast, so don't go anywhere.
I've spent my entire career dedicated to learning and mastering my skills in finance and economics. If there's a skill or topic that you want to master, wouldn't it be great to learn from an instructor who has the same dedication in their field? With Masterclass, you won't need to question the quality of your learning. You can be confident in what you're learning. With Masterclass, you can learn from the best to become the best, anytime, anywhere, at your own pace. I'm working with Masterclass, and we have a deal for you. Right now, our listeners will get an additional 15% off an annual membership at masterclass.com/gold. Masterclass is the only streaming platform where you can learn and grow with over 200 of the world's best. For just $10 a month, an annual membership with Masterclass gets you unlimited access to every instructor. And you can access Masterclass on your phone, computer, smart TV, or even in audio mode. Prioritize like a boss with multimedia icon Elaine Welteroth. How to invest in the stock market with Wall Street's best, or build a billion-dollar company with self-made billionaire Mark Cuban. And the classes really make a difference. 88% of members feel that Masterclass has made a positive impact on their lives. Plus, every new membership comes with a 30-day money-back guarantee. Don't wait another moment to start your learning journey with Masterclass. And right now, our listeners will get an additional 15% off an annual membership at masterclass.com/gold. Get 15% off right now at masterclass.com/gold. Masterclass.com/gold.
All right, so I am talking about the Fed's attempt to blame economic growth for inflation, blame prosperity. We have inflation because we're doing so well, right? Because we have such a good economy, you know, we got to put up with this pesky inflation. You know, not only doesn't economic growth cause inflation, it actually helps hide the inflation caused by the government. Because when an economy is truly growing and producing more stuff, prices go down. Now, the government can take advantage of that by creating inflation that prevents prices from going down. Maybe they stay the same or they go up a little bit. The public doesn't realize how they've been robbed, because how do you know how much prices would have fallen if the government didn't create inflation? You don't. There's no way of knowing. And so the government is able to take away a benefit that you never realized that you were about to receive. So you don't know what you lost because you never had it in the first place. So the government takes advantage of that. They know, hey, we have capitalism that is lowering prices. Let's rob the public of these price cuts by creating inflation. And they won't even know that there is any inflation because, you know, we've defined it as prices going up. Now prices are going up 2% or more, because if it's just 2%, well, it's no big deal because that's our target. We want 2% inflation. But if prices were supposed to fall by 5%, the government gets away with 7% inflation and they claim everything is great. So productivity can't hide inflation, but it never creates inflation. But that's what the Fed said in these minutes. They're thinking, oh, maybe the economy can grow faster without causing inflation. No, there is no speed. True economic growth can be as fast as it wants to be, and you're never going to have to worry about rising prices. What causes prices to rise is when the government expands the money supply. Now, when you have fake economic growth, when you have GDP growth, right, just a bigger GDP driven by government and consumer spending, which is calculated in GDP. And so if the government runs these big deficits and everybody spends that money, that gooses the GDP. That's not economic growth, but that is inflation. It's growth masquerading as inflation. just because the GDP number goes up doesn't mean the economy actually grew, especially if the GDP doesn't accurately reflect how much prices are going up, which it doesn't. None of these government numbers, whether it's the CPI or the PCE or the GDP deflator, none of these numbers tell the real story about how much prices are actually going up. And so none of them mean anything. And they certainly don't mean that we have a growing economy. Yes, we have an increase in the GDP. A lot of stuff can increase the GDP. That doesn't necessarily mean the economy improved. You have a big hurricane, does a lot of damage. You got to spend a lot of money fixing what broke. All that goes into the GDP, but we would have been better off without the hurricane and without all that broken stuff that we had to fix. Leisure counts as zero in the GDP. What is something that Americans desire most? And that's free time. That's leisure. I mean, why do you think people long to retire? Why is retirement a goal? Because when you retire, you have more leisure. You don't have to work anymore. You can relax, right? So Americans value leisure, free time. But there's no value to the GDP of that. If I have more free time, how does that factor into the GDP? It doesn't, right? If I just lie around on the beach, that doesn't generate any GDP, right? The government would rather have me working where that goes into the GDP than have me relaxing when that doesn't go into the GDP. But my overall well-being, my overall standard of living may be higher. I may enjoy my life more if I could relax more, if I had more leisure. But that doesn't really accurately get reflected in the GDP. But the point I wanted to make when I initially started this conversation was the Fed was putting in those minutes that maybe because they say the economy is really good and they were worried about, we might get inflation. Maybe we won't, right? They're saying maybe we don't have to worry. Even though we have this great economy, we don't have to worry about this great economy causing inflation because of the productivity enhancements that are going to diminish that inflation. But those productivity enhancements don't diminish the inflation. They just diminish the price increases. The inflation is the expansion of the money supply. And the government's going to keep expanding the money supply because they got no choice. I mean, they have a choice. They just have no politically viable choice. So they're going to keep on creating inflation. And that means they're going to keep on robbing from the public any benefits that might otherwise have come their way through increases in productivity. And that is the economic reality. That's why this gold and silver rally is just getting started. And you want to buy any opportunity, any pullback. And again, I think they're going to be short and shallow because the real money, the big movement into gold and silver is underway. Gold didn't make an all-time record high for no reason, right? This is not an insignificant event that you want to dismiss. Neither is the breakout. Neither is that move to almost 2,500 on the price of gold without any fanfare. Nobody's talking about it. No one's paying attention to it. What are they paying attention to? Oh, now Ethereum is going to get an ETF. Yeah, that's the big news, right? That's obscuring what's going on in precious metals. Silver hitting the highest price since 2013 is a significant monetary event. Bitcoin going back above 71,000 is completely insignificant in the scheme of things. You know what I think is really funny or kind of ridiculous about the Ethereum ETF is so the rumors start to circulate that the Ether ETF is going to get approved. And it probably will, right? They approved Bitcoin, so why not Ethereum, right? What the hell's the difference? And so the rumors start flying. Now, one of the reasons they thought that maybe the SEC wouldn't approve Ethereum is there was some talk that maybe they regard it as a security. and then it would be an unregistered security. And so they don't want to, bless it by green lighting an ETF. But now the rumors are that something has changed over there at the SEC and that they're likely to approve it. And so Ether, I could understand why Ether goes way up, right? Because, now all the idiots are going to buy Ether in these ETFs. And so let's buy it in the spot market so we can sell into these ETFs when they start buying, right? Just like what happened to Bitcoin, right? Why did Bitcoin go up? Well, as soon as they had the Bitcoin ETFs, investors that had accounts at Schwab or Fidelity, were kind of suckered in to putting some money in. And so they sold their gold ETFs or some gold stocks or whatever they had, and they bought these new ETFs. And now the new ETFs had to go into the market and buy the Bitcoin. And so if you had Bitcoin to sell to the ETFs, you could cash out and you could make a profit. So now everybody wants to buy Ethereum because the same thing is going to happen. But Bitcoin also rises. But why? Because think about it. Where is the money going to come from? If you're an investor and you put some money into a Bitcoin ETF, right? For the first time, you've never bought any crypto. And all of a sudden there's this Bitcoin ETF and everybody's saying, hey, you got to get into crypto. And now there's an ETF finally for Bitcoin. And you say, okay, I'll throw 10 grand at crypto. Let me buy this Bitcoin ETF. So put my $10,000 into Bitcoin. Now the Ethereum ETF comes along. What's that guy going to do? Oh, let me put another 10,000 into Ethereum. Why would he do that? If he was going to put 20,000 into crypto, he'd have put the whole 20 into Bitcoin, right? I mean, who cares? Bitcoin, Ethereum, he's not going to really notice much of a difference. It's all crypto, right? It's all kind of, I'm taking a shot. So the way I would imagine it would go down, this guy who's not a, fanatic Bitcoin maxi, hodl till the grave, diamond hand kind of guy. He's a typical investor who just took a shot at Bitcoin, get into crypto, because that's all there was the Bitcoin ETFs. Now there's an Ethereum ETF, and now that's there. And I'm thinking, oh, well, now there's two. I got Bitcoin and I got Ethereum. What I think he's more likely to do is say, well, I put 10,000 into crypto. I had 10,000 in Bitcoin, but now there's a Ethereum ETF. Let me take half my Bitcoin ETF. I'll take 5,000 out of that, and I'll move it over to Ethereum. Right? He's got 10 grand on the table, and he's just moving the chips around. He's putting some chips on another number, right? On Ethereum. Is he going to want to increase his overall allocation to crypto just because there's a new ETF with another token? No. I mean, maybe, but I think he's far more likely, if somebody made a decision to allocate a particular amount of money into crypto, then that's their gambling money. And now if they got another horse in the race, I got to take some chips and move it over there. That's all. So I don't see how this is good for Bitcoin. In fact, it can be bad for Bitcoin if the money to buy Ethereum comes out of Bitcoin, because now people have to sell their Bitcoin to buy the Ethereum. So we'll see how it all plays out. But my overall point was that all this talk about Bitcoin and Ethereum is another smokescreen to divert attention away from the main event. Gold and silver are the main event, right, in monetary theater. Bitcoin is a sideshow. Ethereum is a sideshow on the sideshow, right? None of that stuff matters, but it's grabbing all the attention and allowing these bull markets to continue in obscurity off of everybody's radar. But that also means that when you get these algorithms, these sellers who are just selling on any indication that the rate cuts are happening later rather than sooner, and that the Fed is worried about inflation or talking about inflation, and you get these sell-offs, you get an opportunity to buy. And that's what I believe happened today. I think you have an opportunity. So I talked to the guys at Shift Gold, and they're going to extend to the end of the week. We have this special on junk silver. And if you don't understand what junk silver is, I talked about it on that special that I did for Schiff gold. But junk silver is just circulated U.S. coins that were minted before 1965. So 1964 and earlier. Dimes, nickels, quarters, half dollars. So the half dollars are generally not in the junk bags unless you got to pay an extra 50 cents an ounce to get those. But if you just want to get dimes or quarters, what did I say? I think it's dimes, quarters, and half dollars. Right? They have silver dollars, but they're an even bigger premium, and they're not part of the bags. So a bag is $1,000 face. It's not 1,000 ounces of silver. It's $1,000 face of coins. So either your dimes or your nickels, or your dimes or your quarters, not nickels, dimes or quarters. You have enough of them so that the total dollar amount that's on the coins is $1,000. That's a full bag. Now we do the special. The minimum for the special is a quarter of a bag. That's $250 face of silver. That can either be in dimes or quarters. You can choose. Doesn't matter. You can have a mixture. You can have all dimes. You can have all quarters. But a quarter bag is $250 face. It costs about $6,000. So that's the minimum purchase. But you can get a half bag. You can get a full bag. But the reason I like these coins is they're great for barter. I mean, if you ever get to a point where you need to use your silver, I'm not talking about selling it. You need to use it because inflation has run out of control. You got black markets, and the people who have the stuff that you need to buy don't want paper. They're not going to exchange their valuable goods or services for rapidly depreciating bits of paper. They're going to want something real. They're going to want a real good in exchange for the goods they've got. Well, you can give them silver. And one way to do it is by giving them the junk silver. But, I wanted to explain something. A lot of people don't realize this. A lot of the younger people who listen to the podcast. But this really shows you the fraud that went on in the government. Because up until 1965, dimes and quarters and half dollars were made of silver. Pure silver. I mean, not pure, but 90% silver. And that all changed in 1965. The government just took all the silver out of our coin, right? The Constitution defines money as gold and silver. And so we were using gold and silver. And we stopped using gold with Roosevelt in 1933, although we continued to have the dollar backed by gold. But American citizens no longer walked around with gold coins in their pocket the way they did from the birth of the Republic until the Great Depression. But they still walked around with real silver in their pockets. So we still had money made of silver because the dollar, we had a bimetallic system where the dollar was legally defined as a particular weight of gold and a particular weight of silver. So if you had a certain quantity of silver, that was legal tender as a dollar, right? And a certain quantity of gold. Well, we never amended the Constitution to change that, but the government just took the silver out of our money. And it was really counterfeit. Look at what they did. I don't have, the change with me. But if you look at a dime, if you order one of these junk bags, when you get your coins, because it's hard to find these coins in circulation. I remember when I was a kid, when I was like 10 years old, 12, 15 years old, every time I got change in the store, this is in the 1970s, I would look at the change and I would turn it on its side and I would look. And if I didn't see any, orangey, reddish color, the copper, if it was all silver, then I knew I had a silver dime made of real silver or a quarter. And so what did I do? I kept those, right? Gresham's law. Bad money chases out good money. What I did is I would take the real silver and keep it in a little jar, and I would spend all the copper clad. Now you never find real silver money because enough people have seen them and taken them out of circulation. So they're gone. But what the government did is they took a copper and they coated it with nickel, and they made the dimes and the quarters and the half dollars look like the ones that were made of silver, but they weren't made of silver. So they're counterfeit. You know, if the government made an honest dime, it would be made of all copper, just like the penny, which, of course, the penny is not made of copper anymore either. Starting in 1981, they started to make them out of zinc. But in 1965, the government was making a true copper penny, and it was making a dime that was also made out of copper. Now, they put a little bit of zinc on it to make it look like it was silver. Why did they do that? Because if they made an honest dime, which was pretty much all copper, and the public saw this dime that was actually smaller than a penny, why would anyone believe that a small piece of copper was worth more than a larger piece of copper? In fact, 10 times as much, because the dime is worth 10 pennies. Well, how can 10 larger pieces of copper be worth less than one small piece of copper? You see, when it wasn't a small piece of copper, when it was a small piece of silver, well, that made sense because everybody knew that silver was more valuable than copper. So you needed a lot more copper to get some silver. But if you try to pass off a dime that was actually made out of copper, the Americans weren't dumb enough to accept it because they would know that the dime was not worth as much as a penny when they're all made out of copper. Because what made a dime was that it had a dime's worth of silver, which was 1/10 of a dollar's worth of silver, right? That's why it worked. But if you try to give somebody a smaller piece, that they're going to see right through it. So it's counterfeit. The government tried to make a dime out of copper to look like a dime that used to be made out of silver. So they coated it with a little zinc. That's what they did. That's fraud. And they made it even worse. If you look at a penny, and that's true today, grab a penny, out of your pocket and turn it on its side. You'll notice that it's smooth. Now look at a dime. Look at a quarter. It's not smooth. It's got ridge marks. It's rough, right? All these little ridge marks. Well, why are there ridge marks on a dime and a quarter, but not on a penny and a nickel? Well, here's the reason. When a dime or a quarter were made out of real silver, if somebody took one of those coins and scraped off, right, a little bit of silver from the edges, there would not be enough silver there to make it legal tender. Because in order for that dime or quarter to be legal tender, it had to have a precise amount of silver in it. But if somebody scraped a little silver off, which you could do, because if you could scrape off a little silver off of every dime and every nickel quarter you had, and you set it aside, you're ripping people off because you're not giving them the quantity of silver that they're entitled to. You're spending a dime, but you're not giving the seller a dime's worth of silver. You're keeping a little bit for yourself. You can scrape off enough silver to eventually have a new dime or a new quarter that you theoretically could make. I mean, you could mint those, but you can still sell the silver. So in order to stop people from clipping a coin, they put ridges on the coins that were made out of silver, the dime and the quarter, the 50-cent piece. But they didn't put any mill marks on a penny or a nickel. Why? Well, because copper and nickel are not legal tender. So it doesn't really matter how much nickel is in a nickel, right? You could get a nickel that didn't have quite a nickel's worth of nickel, and it didn't matter because there is no legal requirement regarding how much nickel has to be in a dollar. There is a legal requirement on how much silver has to be in a dollar, but it really doesn't matter how much nickel or how much copper. Plus, copper and nickel were not valuable enough that somebody would waste their time clipping those coins, right? Who cares? You're going to scrape off a little copper, big deal, right? No one cared about it. It was only silver that they cared about. Now, why then, when the government made these dimes and quarters that had no silver in them whatsoever, why did they go through the added expense of putting those mill marks there? Why not just make dimes and quarters with these smooth edges, just like pennies and nickels? because they were counterfeiting the coins. You see, early on, they didn't tell anybody that they took the silver out. They wanted people to think that the dimes and quarters that they were getting were still made out of silver. That's why they put the nickel on the copper. That's why they put mill marks on these copper-clad coins, because they wanted them to look like the coins they used to work with. That's counterfeit. That is fraud. That is what went on in this country. The government defrauded American citizens out of their lawful silver money and replaced it with nickel-cladded copper, or copper-cladded nickel, copper-cladded nickel. But that's it. Now that we don't even have that, now it's zinc or whatever, and they keep diminishing the metal. Eventually, it's just going to be maybe plastic that they're going to make the coins out of. If they keep making them at all, they'll have to just stop making them completely. I mean, they're losing money, obviously, on the penny, even with zinc in there. But zinc prices are going up. Nickel prices are going up. The value of the money is going down. But the point is that this was all a big fraud. But when you go and you buy the junk silver, you get that little piece of history. You get real American money, real silver, back when we still honored the Constitution and had lawful money. We had dimes and quarters that were actually made out of silver. Now, normally these bags have a higher premium than what they have right now. That's the reason that we did the special too, is because we noticed that they're cheap relative to where they have been. And one of the reasons that I'm trying to get people to buy silver before the price really moves up is because two things I think are going to happen. I think silver prices are going to take off. I mean, they're going to go way above $30. I think they're going to go way above $50. They're going to go above $100. Right? Silver is cheap. But when the public really realizes how cheap silver is and they rush to buy it, the premiums are going to go way up. So not only is the silver going to get more expensive, but if you want to buy the silver, that's going to get even more expensive. So before you get the big rush of buying, while people are still distracted by Bitcoin and Ethereum, take advantage of that and buy these junk silver bags. So you go to shiftgold.com. I mean, yeah, it's not shiftsilver.com, it's shiftgold, but we sell both gold and silver. So go to shiftgold.com and order these junk silver bags, whether it's a quarter bag, that's the minimum, get a half bag, get a full bag. You can get multiple bags. You know, at one point, my father had 10 full bags of silver coins. So $10,000 face of silver coins. And he remembers telling me that, you know, people were laughing at him when, you know, he was doing this, because my dad had $10,000 of coins in the bank, like in a vault. He kept them in a safety deposit box or so in a bank. And people would say, well, Erwin, why don't you just deposit the $10,000 in the bank and earn interest? You're not earning any interest on your dimes and your quarters, and you're paying the bank to store your money. Why not just, you know, keep it in the bank account? You know, people still didn't get it. My dad knew that the silver in those coins was worth a lot more than the paper that was in the bank. So he didn't care about the interest that he was giving up. And when he initially was buying those bags, he wasn't buying them. He was taking the money out of circulation. That was how you got them, right? It wasn't like you went up and bought them. He got them as change. In fact, I had an uncle that had a grocery store, and my father said he used to go in there every day and take the change and put paper in and take, because it was silver. He wanted to change. And people are like, you know, what is this guy doing? Like, they looked at my dad like he was nuts because he wanted dimes and quarters. But eventually, those bags that cost him $1,000 each to fill, and he had, like, you know, went to like $50,000. Like, when silver was at $50 an ounce, maybe they were $35,000 a bag. I forget the exact how high they were. Unfortunately, my dad didn't own them when they got that high. He ended up selling a lot of his silver to invest in this gold mine. which ended up being a fraud. He ended up getting conned by this con man with a fake gold mine, and so he ended up losing a lot of that money. But he had the right idea, right? He just unfortunately didn't execute it properly and ended up getting swindled. And some of my dad's, we got some of his friends into this gold mine too, and everybody got swindled. And then my dad felt really bad about it, so he paid everybody back. All of his friends that had invested because of him, my dad just worked and paid everybody back. So he was the one that lost. But he had the right idea, and people thought he was nuts for doing it. Well, it's the same situation now. I mean, people don't get what's about to happen to silver. I mean, if they didn't get it back then, right, at least they were used to having silver in their coins. I mean, now, most people don't even know that there was ever silver in a dime or in a quarter. They have no idea. The public has been scammed for so long. I mean, initially, the politicians had to figure out how to scam the public, how to con the public out of their gold, out of their silver, get them to accept worthless paper, irredeemable paper, when they used to have paper backed by gold and silver, and get them to accept nickel and copper instead of silver. But now they don't have to do that anymore. The public has been so dumbed down. They've never had real money. They've never transacted in real money. So they have no idea the difference between what they got now and the real money that their grandparents used to have. But if the people in the 1960s and 70s were fooled, imagine how much easier it is to fool the people in the 2020s. So right now, is take advantage of these fools who don't understand what is going on and who sell into every rally in precious metals. The smart money is buying, right? That's why we're making new highs. Right? We wouldn't be making new highs if real money wasn't buying. And eventually, if they haven't already lost control, the sellers are going to lose control of this market. They're not going to be able to bring it down by bashing it. It's just going to keep going up in their faces until the shorts are forced to capitulate. The people who have been selling these gold and silver rallies are going to stop doing it eventually because they run out of money, because the market is going to make such a big move that they're not going to be able to afford to stand in front of it, right? You don't want to be in front of a freight train. Well, this is going to be a giant locomotive, and nobody is going to stand in its way. And that's the other reason that I keep telling people to buy the mining stocks. You know, the mining stocks, the GDX and the GDXJ hit new 52-week highs on Monday. Of course, the minute gold goes down, they've pulled back, a nice amount already. They shouldn't go down, right? Gold stocks should be going up even when gold comes down, because gold has already gone up so much that gold stocks have a long way to go to catch up. So even if gold goes down, it doesn't matter. It's still gone up so much. But these stocks still are way below where they were in 2020 when gold was, 15% lower than it is now. Gold never even got to 2,100, I don't think, or maybe right around there was the peak, maybe for a day. Now we got the 2,450. But the stocks are substantially lower today than their peaks in 2020. And of course, if you go down to 2011, we're miles away from where we were in 2011. Of course, in 2011, when gold was at 1,900, the reason that gold stocks were much more expensive then was because gold had gone up for 10 years straight. Gold had gone from under 300 to 1,900 in a decade. So gold investors were far more optimistic that that trend was going to continue. But after going sideways for more than a decade, that's not built into the price anymore. People buying gold stocks don't expect the gold price to keep rising the way people expected it to keep rising in 2011. Well, they were wrong. And I was one of them. I thought the gold price was going to keep rising in 2011. We were all wrong. It fell. But now everybody expects the gold price to fall. And I think they're wrong again. I think this time it's going to keep rising because it's now gone sideways for over a decade. But during that decade or more of sideways action, inflation has run amok. the cost of mining has gone up dramatically. That's another reason that the gold stocks didn't go up, is because the cost of mining did. And so their profits didn't. But that's about to change. That is already changing right now as the price of gold is outstripping the cost of mining it. And I expect that to continue. So whereas investors were wrong in 2011 to think gold would keep rising, they're wrong again to think it won't. Now they think it's going to fall. They think, oh, gold's at 2,400. It's got to come down. No, why would it come down? It just broke out. This is a whole new ballgame. I think where we are now at 2,400 is where gold was in 2002, 2003, when it went above 400. That was a breakout, and then we rose to 1,900. This is another breakout, at least as significant as that, if not more so. And I think there's even more upside. So these gold stocks are a steal. So if you want to profit from this, repricing of these stocks from being ridiculously cheap just to being fairly valued, although I'm not going to sell my gold stocks when they're fairly valued. I'm waiting until they're expensive. I want to watch gold stocks go from being really cheap to ridiculously expensive. We're not even close to being fairly valued yet, let alone expensive, and certainly not ridiculously expensive. So if you want to participate in this, then you buy the mining stocks, right? And the best way to do it, in my opinion, is to get into my gold fund, the Euro Pacific Gold Fund. You can buy it no load at any of the discount brokerage firms, or you can set up an account with Euro Pacific Asset Management, and we can manage a portfolio for you of gold mining stocks, or just do it yourself. Pick your own gold stocks, but you got to get into the market. I think it's good to make sure you don't get ripped off like my dad got ripped off by a con man. There's an old joke. What's a gold mine? What's the definition of a gold mine? It's a hole in the ground with a liar standing next to it. There's a lot of deception. There's a lot of snake oil being sold in the mining industry, and a lot of it is hype, and you don't know. People always tell a good story. If you want to get into the junior mining sector, don't do it unless you got somebody helping you who knows the market, who knows the players, who knows the projects, the management teams, who knows all this stuff, who's been around. Adrian Day's been doing this for like 30, 40 years, right? He's forgotten more about gold mining than most of these analysts today know. So that's who I want managing my gold portfolio, is Adrian Day. And he's the guy that is managing the Euro Pacific Gold Fund. And he's also managing the individual separately managed account at Euro Pacific Asset Management. So go to our website, europac.com, and talk to the representatives about our separately managed accounts. We don't just do gold and silver accounts, but right now I think that's where the action is going to be following this breakout. So I wanted to impress upon my audience, I think, the urgency with which you really want to establish these positions, both in physical precious metals and in the mining stocks, because I think we're about to see a much bigger move. And so in advance of that, you want to take your positions, right? And if there's a pullback, there's a pullback. I don't care, right? If you're buying physical metal, it shouldn't even be a consideration. I'm not talking about trading, opening up, you have a discount account and you're trading, a silver or gold ETF and you're day trading. That's different. Physical gold that you buy from Shift Gold and silver, that's not for trading. If never buy physical gold because you want to do a short-term trade. It's not worth it, right? There's too much cost involved. You got to ship stuff. No, if you want to day trade, just open up a commodities account or trade ETFs through your brokerage account, your discount brokerage account. That's not what I'm talking about. What I'm telling people to buy physical gold and silver and take possession of it and keep it. Not about trading.